State Bank of India for hosting this brainstorming workshop of public sector banks from the western and southern region. The morning session pre-lunch was devoted to internal discussions between the bankers on several aspects of Indian banking, particularly with respect to improving the credit flow while mitigating the risks associated with that, to further strengthen the growing Indian economy, and methods how we can achieve global standards for the Indian banks. The State Bank of India has, over the years, had a very robust mechanism by which faster credit decisions are taken in a very transparent manner. Decisions on credit, decisions on resolution of stress. A presentation was made by the State Bank of India based on several years of experience. And I'm given to understand that all the bankers are now wishing to set up such a mechanism which will enable faster resolution of stressed accounts in a very transparent and speedy manner, and will put it up to their boards for necessary consideration. There's also been a proposal that some of the banks may consider having oversight committees. It could comprise of retired judges or vigilance officials, regulators, and bring in some external expertise to help faster decision making in the Indian banks. A few thoughts that came out in the discussions revolved around the working of Indian public sector banks in silos, particularly when it came to multiple bank arrangements that many MSMEs and small and mid-cap borrowers have, which was discussed by the bankers during the course of the day. And in many cases, good companies also may be suffering because of this approach, for which the banks have decided to come together and start working in a more cohesive manner in taking faster decisions to resolve the credit needs of MSMEs, exporters, and other small and medium borrowers, so that the wheels of the economy, the growing needs of exporters can be addressed much faster. There are many accounts which are also facing certain restrictive covenants because of restrictions placed on some banks in lending, for which also a process has been devised by the bankers amongst themselves to ensure that credit flow to good borrowers, to good accounts, where some of the PCA banks or banks with certain lending restrictions are also a part of the consortium, will also not face any difficulty in meeting their working capital needs. a committee has been formed under the chairmanship of Mr. Sunil Mehta, non-executive chairman of Punjab National Bank, which over the next 2 weeks will come out with their recommendations of a suggestion that was deliberated in great detail amongst the bankers today, who believe that it may be worth considering to set up an asset reconstruction company and or an asset management company for faster resolution of stressed assets which have multiple banks involved in these accounts and often which get delayed in resolution and cause loss of value to the banking system as a whole. This group will consider whether such an arrangement will be good for the banking system, and if any such suggestion is considered advisable, they will also consider the modalities by which such an ARC or an AMC should be set up. Several other suggestions came out in the deliberations, particularly to strengthen the governance processes in the Indian public sector banks and measures to improve the performance of these banks were discussed amongst the bankers and subsequently put up before me, which has further strengthened my confidence and the Government of India's confidence in the future of the Indian public sector banks. The Government of India is the owner of 21 public sector banks, stands committed to support each and every one of these banks, and the Government of India believes that these banks have a very important role to play in the economic and social development of India. The government stands committed to give full support to strengthen the operations of the public sector banks and to protect the interest of depositors, customers, and all the stakeholders of our 21 public sector banks, including the employees of these banks. We believe the various steps and initiatives taken by the government, by the Reserve Bank of India, and by these banks for an true and fair picture and honest recognition of the state of affairs of these banks, of an honest appraisal of the asset quality of these banks, which has been fast-tracked over the last 2.5 years, is strengthening these banks to be able to meet the ever-growing needs of the common man, of micro, small and medium-sized businesses, and also ensuring that these banks are able to lend in a fair and transparent manner and at lower cost of credit to the borrowers of this country. We'll believe that the honest recognition of these non-performing assets and the resolution framework under the Insolvency and Bankruptcy Code, which the Government of India and the Reserve Bank of India have initiated in India, reflecting the true position of these banks and also bringing to light large amounts of indiscriminate lending, particularly during the to 2014 period, a lot of which is today under some stress or the other in different forms, will help strengthen these banks to be able to serve the people of India, and the government of India will give every necessary support to ensure the success of this resolution process, both in terms of governance reform and in terms of better management of the balance sheets of these banks. On a personal note, I found that the efforts that the public sector bank managements presented before me truly encourage my own commitment personally and the commitment of the government of India to support these efforts. And I am very confident that together the bankers, the government of India and the Reserve Bank of India will be able to get these banks into good shape and once again become the engine of growth for the Indian economy. I would like to thank State Bank of India, all the other bankers and the officials who have joined me in this effort to understand the problems of these banks, to appreciate the very good suggestions and solutions that the bankers themselves put before us. And I would like to express my full support and the support of the Government of India in these efforts that these banks have committed themselves to. Thank you.
Thank you, sir. Thank you for those words. And thank you. We'll try and take questions from just one by one. The mics will come. Just request you to mics. If you can raise the hands, we'll come the mic.
One by one.
Ritu will get the mic, please. Just a second. We'll have the mic.
And introduce.
Just introduce yourself, please.
I'm Ritu Singh from CNBC TV 18. Mr. Goyal, my question was about your proposal to set up the AMC or the ARC in either way. I suppose before you even begin, the Mehta committee begins to probe the possibility of such a ARC or AMC, what will be the source of funds to support this? And when you say that the government stands committed to support these 21 public sector banks, are you proposing that the government could also perhaps participate in terms of, fund infusion into this proposed ARC or AMC?
Well, I think it's too early to go to that level. We will have to wait till the committee has discussed with all the bankers and come up with their recommendation whether we should look at this as an option and what should be the structure or modalities of this proposal. Let us wait for their recommendations and then we'll take an appropriate call at the right time.
Manojit, please.
NIIF could be a possibility that this committee may consider. They can discuss with the NIIF. As we have mentioned earlier, the NIIF is a completely independent and autonomous body, and the government of India does not either interfere in its working or in its investment decisions.
Manojit from the...
Mr. Goyal, this is Manojit Shah from the Hindu. You started your comment by saying one of the things discussed to increase the credit flow. Now, the amount of capital the government which will give the bank this year, about 65,000 crore, is adequate for the regulatory capital for the provisioning, but not sufficient for growth. That is what Moody's, rating agency Moody's said yesterday. My specific question is the government considering to increase capital allocation in public sector banks in the current financial year?
I think it's a little early to jump the gun to that point of view. We have just had a monetary policy yesterday. I think all the banks will have to look at their balance sheets, will have to see what is the extent of money that they will be receiving from shedding off their non-core assets, which process is already underway. The Sunil Mehta committee will also come out with their recommendations on the AMC, ARC, which will also help the banks to trim their balance sheets and shed some of the overhang which has troubled these banks. Similarly, we will have to see the impact of resolution of cases under the IBC, which is now seeing very good success. Once all of this is on the table, we will have the Indian Banks Association, the IBA, whose executive director is here with us, work with all the bankers and come out with what really is the need of each of these banks. And an appropriate decision at any point of time required will be taken. I'd like to reiterate that the government of India stands solidly behind each and every one of these 21 banks. We want them all to come out of their stress, and we want all of the banks to be growing to meet the needs of MSMEs, to meet the needs of the economy, which is rapidly growing. You've seen the numbers last quarter, 7.7% growth. The monsoon is showing very good signs. I've had the pleasure of enjoying the monsoon in Mumbai after many years. Yesterday, I was expecting it to pour today, but looks like the municipal commissioner said tomorrow there will be heavy rain. So I think good monsoons coupled with a robust growing economy, coupled with the confidence that I saw in the bankers today, we have a great year ahead of us.
Vishwanath,
Mr. Goyal,
please introduce yourself.
Vishwanath here from Bloomberg Quint. Just wanted to understand, already there are about 5 public sector banks without heads. There's also
Sorry?
5 public sector banks who do not have a leader. There's also going to be some positions falling vacant later part of this year. At a